Well, welcome everyone to today's webinar on 3 essential tools for understanding cash management pricing. This is Brian from Strategic Treasurer, and we're pleased you could join us as we discuss how to use statistical and charting tools to help your company better understand and evaluate your bank prices. Our speakers for today are Craig Jeffrey, founder and managing partner of Strategic Treasurer, and Kristen Safaldi, Director, Product Development and Analytics at Strategic Treasurer. Welcome, Craig and Kristen, and I'll now turn the presentation over to you.
Thank you so much, Brian. Welcome, everyone. Glad you're here. Kristen, I'm excited to be talking about bank fees with you again.
Yes.
Well, we have a lot to cover in a short amount of time, so we'll get right to it. Here is our agenda. We've got these 4-section bank fee fundamentals where we will cover some of the foundational items about how banks charge, how relationships are managed in the context of bank fees. And Kristen will go through the available tools, some of the charting, graphing, statistical methods of looking to see where you may sit compared to others. This is useful for just knowing where you're sitting. It can be helpful on the negotiation side. It can help you zero in on perhaps areas that you're getting a really good deal on, perhaps areas where there's room for tightening up. And in the context of an overall excellent relationship with your banking partner, which is where we'll touch on how to approach bank fees, the data, and negotiating in a relationship. It's your bankers, and if you're a banker, your clients. There is a nice balance between providing services and getting paid, and receiving services, advice, and getting a strong, solid market rate. And one of the key things too is, as part of the takeaways that we'll end with, is understanding those items and the fact that the negotiations happen in the context of a relationship. And there's a lot of important things with regard to that we'll touch on today, and that we won't get time to as well. So we'll move forward from there into understanding bank fees. And Kristen, maybe you could take us through this.
Yeah, thanks, Craig. Good morning, everyone. So it's important when we're thinking about our bank fees and trying to understand where we stand. Are we at market rate? We're getting a good deal? Are things a little out of whack? That bank fees are composed of multiple elements. What type of accounts, how many accounts are you holding with your financial partner? Are you earning hard interest? Are you utilizing an earnings credit rate to offset your fees? How often are you overdrafting? And then are you sweeping funds overnight into short-term investments? Are you leaving a certain amount on deposit at the end of each day? It's also important to understand that bank fees are based on volume utilization as well. So higher volume can result in lower fees. Important to keep your eye on that when you're making acquisitions or doing spin-offs. And also bank fees vary from banking partner to banking partner, and what they roll up into a service is different. And often we want to know, how can I tell if I'm paying too much in bank fees? So we here at Strategic Treasurer find that the best way is to use data from your peers, displayed in a way that's clear and easy to understand. We want to understand if our prices have outpaced our recent inflationary period, or are your prices outside of what your peers are paying? And are those prices increasing in step with market rates? Because unfortunately things, increase over time, and we want to see that, our increases are at least, at pace with the market rate. There's not a spike where ours are in comparison to our peers. And some products have even, in our analysis, we've seen have decreased slightly over time. So you want to look at those few products and see, is mine also decreasing, or is mine going up the opposite, or kind of staying the same, and I have a little wiggle room to bring that down?
Yeah, and the analysis statements are not always just like an invoice, right? We can call them an invoice, but they have a lot of other components, moving parts that differ. There's also a credit aspect to them. So that brings us to our first whole set of questions. We have 2 stacked in here. The first one is, when was the last time your company reviewed bank fees? So there's the 5 options there. I don't know. Who has the time to within the past 2 months? So select one of those for the first section. The second question is, what is the frequency of check-ins with your relationship manager? How often are you meeting with your relationship manager, your treasury manager from the bank? What is essential, from a check-in standpoint? So go ahead and select those, and we're not going to have people type poll unless you want to in the chat box. We're gonna send the responses to you for for everybody who attended. But if you want to type poll, as is the habit during our webinars, that's great too. All right, give everybody a little bit more time to answer. So interesting. Within the past 12 months, this is a pretty active group, Kristen.
Yeah.
60% and 80% within 1 to 2 years. So within 2 years, the majority. Who has the time? I don't know. The people that maybe don't have any time at all are not on the webinar. So good information there. And then what is the frequency of check-ins with your relationship managers? Annual? That's pretty sparse. Semi-annual. Quarterly is the second most, right? Annual and quarterly make up 73%. Interesting to see how that fits. Thank you for everybody for responding to those. We're gonna continue our fast-paced step through in Olympic style. To one of the favorite terms is box and whisker plot, isn't it, Kristen? What does this mean?
Yeah. Yep. Box and whisker plot. Mostly, I shorten it to box plot. But so these plots are very helpful. They're going to illustrate the distribution of numerical variables across our data. So we can glance at them and quickly see variability, symmetry, central tendency of our groups of data. Throughout today's presentation, we're showing you charts from our Phoenix Guide to Bank Pricing for general account maintenance fees across all markets. So these are like just what it says, account maintenance, maybe some ZBA maintenance in there, sweep account maintenance, but very general. So that's the data consistent across all the charts in today's presentation. You can see these box plots are a nice way to compare your data. You want your price to be hanging out in those blue boxes. So in between that lower and upper quartile of data, so in the 50th, percent of data there. These charts also display the minimum price that's seen in the data set and then the maximum. So if you are comparing your prices and they're hovering around that maximum, definitely time to pick up the phone and kind of ask, well, why is it this way of your banking partner? Maybe there's things rolled into it. Maybe it's time for an adjustment. And then if you're hanging out at the minimum, you're doing good. But generally, when we do a quick glance at these box and whisker plots, we want to see our data somewhere in between that blue box. I don't know if you have anything to add, Craig, on this one before we move on.
No, I liked how you explained it. And once you understand that range, the blue section is the middle 50%. That's pretty helpful information, and the fact that there can be extremes. Sometimes banks can give certain things away for free and others aren't. So it just gives you a sense of the distribution as Kristen, you were saying. So now another statistical item that you could take us through is linear regression.
Yep. Linear regression charts are great for comparing trends, right, against our data points. And we want to see patterns. We want to see if there's any outliers in our data here. And so you'll see on our particular charts, the blue dots are representing the average general account maintenance fees prices for each month in the data set. And then we're seeing that these have been trending up over time pretty quickly. So just being able to look at these snapshots, ours are created in a business intelligence tool. Certainly, folks are probably very familiar with pulling regression charts out of Excel or other systems. Yeah. We also like to look at things in percentile table, so comparing your data in relationship to others' data. We break our data down into volume bands so that we can analyze the frequency or distribution of the data values across different intervals or ranges. So in this case, general account maintenance fees, your volume bands are most likely going to correspond to how many accounts you have open. So 5 to 10, 10 to 15, and 15 to 20 in this example. Percentiles will indicate percentage of data values equal to or below. So in this table, the grayed out 50th percentile section, that's again where you want to have your data hanging out. If you're in the 90th percentile, that's that call your relationship manager, ask what's going on, and then if you're in that 10th percentile, that's favorable, extremely favorable pricing. Anything to add there?
Call your banker and thank them, but
yeah, exactly.
well, I think it's interesting because we went through the box and whisker plot, which shows the distribution where the core 50% is and the geographic dispersion. We looked at linear regression over time, so you could see how fees are trending. And this shows where you are in the 10th, 90th, 50th, and there can be some other breakouts. And so it's looking at data over time and as a snapshot in different ways that help you be armed effectively to see where you're sitting from a fee perspective. So excellent job. And that brings everybody back to poll question number 2, which is our third poll question. How confident do you feel in understanding where your organization is with bank fees and knowing how to ensure your fees are where they should be? That's in quotes, where they should be. Your credit quality, the particular position of the relationship, your volumes, your trends, all of those things have an impact. So there's not a single right answer, but how confident are you? Very confident, down to not at all confident, or not applicable. So I'd love to see where people are. And this is our last poll question, takes care of 3 poll questions total. So with these half-hour webinars, we move a little more quickly. All right. Appreciate everybody who responded so far today. How confident? Very confident, 23%. These are the ones who break the curve on the test, right? They got the 97. Everyone else was averaging 50, and so whatever the adjustment was didn't happen. Right? You know those people, right? Somewhat confident, half. Not very confident, not confident at all, another 22%. So pretty much a pretty even split between very confident and not confident, and only a few don't know. So good session for the webinar. For those that are very confident, a refresher, maybe there's some other ideas and tools that make sense. On the not so confident, maybe there's ways you can use some of the materials that we have to extend that confidence to move you into the top category. Chris and I will talk about some of the ways to move forward, what you may want to consider. I'll take the first 3 and Kristen can finish us out. So the first one is banking relationships are a two-way street. You need to be important to your banks that you need to be important to, which may not be all of them, maybe some of them. How are you important to them? You may need credit, you need services, certainly advice. So, if you're working on pricing for annuity services, these ongoing services like cash management, when you approach them, it shouldn't be, we need a huge cut or, something more broadly defined or more generic, but going with very specific requests in mind, carefully considered data. How do you know you're paying, above market, below market, at market? How does that factor into your particular relationship? And what your needs are. Your needs can vary, your credit situation can vary. There's multiple factors. So being careful with the data in important relationships matters. And that's truly, truly vital. Second is, working as a team. You have this people, huddle around a table. If you have things that you say, we'd like to see adjustments in prices in these areas, be specific. Why do you think you should have a lower, better price, and approach it with data as opposed to a broad-based, please cut our fees. Bankers need to make sure the relationship makes sense from their standpoint, and it's far easier to go with specific areas for that may need to have an adjustment, or that you may want to request an adjustment on. The second point here is ask a bank to demonstrate any new products that may add cost savings based on changes in volume, or removing things like paper or CD services. Like, do you really need paper statements mailed? But any products that they may offer, is ask them about those things. Take the time to listen to what they have. It may have cost savings. It may have internal cost savings. If you could pay the bank $10 an item for whatever more, and that would save you $20 of internal charges, it's well worth compensating the bank for handling. And oftentimes that's the case. That's where a significant amount of the savings is. But ask them across the board. The third point with the bank chevron there is consider a hard investment account or moving money into short-term overnight investments. Now, those are conversations you should have with your bankers. Having deposits in operating accounts is in favor with most banks today. That's not always the case. The markets change. But when you're looking to earn a certain return, the earnings credit rate may be significantly lower than if you target hard interest, or if you move into some type of overnight investment. So that's part of the equation that factors in how you're compensating your banks and what you're paying. And so, look at those options when you're doing your evaluation.
Great. And leading into that, if you are using an earnings credit rate to offset your fees, it's always a good idea to check that against your peers as well, and use that data to make a case for potentially asking for a higher earnings credit based on the amount you're keeping on deposit at the bank. The Phoenix Guide to Bank Pricing does include a detailed ECR analysis section. We didn't delve into that earlier in this webinar, but definitely the data's in there, and you want to go educated with data in hand if you're going to make that case to help offset some more of your fees with earnings credit rate. Another thing to keep in mind is don't use your demand deposit accounts as revolving loans. Those negative collected balance rates are hanging between 10 and 14% right now. And if you're very fortunate and you have a very low rate, the financial institutions tend to pick up on any activity where we're overdrafting frequently, and will increase that rate suddenly, which could cause a sudden spike in fees on your end. Also important just to keep your eye on any overdrafts, and maybe work with your relationship manager to set the appropriate parameters there so that doesn't happen for annual cost savings. Another thing that's good to look at is internal analysis of users receiving reports, accessing a bank portal. So if we only have 2 people using a report that's costing us $35 every time we access it, but we're paying for like 15, 16 people every month to get in there, that's some cost savings that will add up over time. It also helps with our data security if we are limiting things to only the people who truly need to be viewing certain reports in our banking portals. And then also there's just automated emails that might be unintentionally going to employees that have moved along, no longer in the department, or even left the company. Various items like that, which over the years can become overlooked and actually add up to a significant amount per month that we might be overpaying. And that's just a lack of time sometimes to really dig into who's using what. Your relationship manager can help you by providing lists of emails that reports are going to, and who has access to what, to help ease that process. Last but not least, you could consider partnering for an external analysis of bank fees and negotiation on your behalf, allowing a third party such as strategic treasurer to handle the negotiation to help maintain a favorable relation with your banking partner, kind of playing the third party off as the quote unquote bad guy. And then also just getting that third eye for that external analysis and external data set to be compared to what you're seeing, because oftentimes you're only going to be able to see your own data. You might be able to compare against your banking partners, but you're in the dark on what's going on outside of your relationships, and pulling in a third party and allowing them to compare your data to what they've been collecting is very important. Here at Strategic Treasurer, we've been collecting bank fee data for 15 years. And we have thousands of bank fee analysis statements that we pull from, and all across everything from small regional banks up to our global banks such as Citibank that we've got data on, and all industries and partner sizes as well. Is there anything else you'd like to add, Craig, that I might have missed there?
No, I think you covered it. I just would maybe expand on the partnering, and I think you did a great job. We help with one-time negotiations as well as managing these services over time. And like you said, we can play the bad cop, good cop, bad cop, but more importantly, we always do the negotiations in light of the relationship perspective. It's not adversarial. It's your bankers are very important to you. They give you credit, they give you advice, they give you service, they help your organizations. And so it needs to be a partnership view. And that's essential for when you look at pricing components, and it can get sensitive. Having a third party who's not, I'll just say non-emotional about the relationship, but can step through it, can help keep both parties on an even keel and say, hey, this is appropriate, a time for alignment on pricing. Our volumes have gone up, these things have changed, we've shifted, whatever those elements are. It works out really well when someone's negotiating for you who understands the broad picture and provides a bit of a cutout for that activity. So thanks for sharing that. Kristen mentioned the guide, the Phoenix guide that we have, Phoenix, Feenix. How do you get the guide to benchmark your bank fees to see where you sit compared to others using some of the statistical tools that Kristen had mentioned? And just really briefly, there's 3 steps on the side. Go to strategictreasurer.com/pricing. You can go there, look at the price of the guide. It's a digital guide. You order it, you enter your information. There is a person who reviews it. And then you access your credentials. We'll send you credentials to go and search, to look up, to read, to view. But what do you get from this if you get the Phoenix book of bank pricing? You get access. Up to 5 users are included as for one flat fee. You can get another band of 5 if you have a lot of people who need it. You can get higher levels than that as well. But multiple people can access the online version, which makes it extremely easy to use as opposed to a physical book. Twice a year, biannually, we provide an update. At September 24, there'll be another update to the online digital version. Because it's digital, we can update it more frequently with data. And since there's been a significant rise in pricing, inflation was high, a significant rise in pricing, there are changes that are happening, and those show up about every 6 months. You can see how that's flowing through the banking world. You have a subscription. All those users can use it for 12 months from the date of purchase. It's a subscription. You continue to renew it beyond that time. And there's also, for those who are bankers who want to look at additional sets of data to see how they're pricing compared to the market, there's a bank version of the book available. It's a different book. It has additional information, other elements, and a different cost. But feel free to contact Strategic Treasurer to figure out what the differences, find out what the differences are. These are both very, very useful and helpful to corporations and then for the users. So go to strategictreasurer.com/pricing. Our time is rapidly approaching the end, Kristen. Maybe you could start us with the key takeaways. So what should our listeners be thinking about?
Definitely consider the complexity of your bank fees. Bank fees can be difficult to understand, especially across borders and banking partners. Maybe you don't have the time in your department. Everyone is so busy. No one can dedicate, the time to dig in and do this. So having pre-summarized data will speed that review process and allow maybe someone from your department to take the time to go over it. And also important to know, what are your peers being charged when you go to your relationship manager to ask any questions on pricing, and to have some statistical charts to offer quick points of reference for yourself and for your banking partner. The second thing is, we'd like to consider the opportunity. How much can your organization save if you go through this endeavor of comparing your bank fees to your peers? Would you pursue higher earnings or lower fees through the earnings credit rate? Are there tax implications if you roll your money into an interest-bearing account or push it out overnight to earn a higher earning? You want to review product innovations and updates at least annually with your relationship manager, and definitely checking in bare minimum quarterly is recommended. And then also, you can use data that you've got from something such as the Phoenix Guide or across your own banking relationships, if you have the time to collate and make those comparisons, to support requests to your banking partners.
Yeah, and the last section here is, partner or consider partnering to work on overall relationship plans, the broader category, all the way down to individual fees, whether it's a one-time negotiation, whether it's a bank RFP, whether it's trying to align on some pricing. So, we have a team. Kristen's team can review bank fees, can negotiate bank fees. They can make estimated savings, and run the negotiations in a variety of ways. Either we do it fully directly, without your involvement, other than sharing what's going on, the strategy and approach, or it can be done together. So we determine what the strategy is, how that's going to be approached, and carry that on with your banking partner. So depending on what's most important to your organization and what you're most comfortable with, we have the flexibility to work in all of those ways. And what's key for us is to make sure that it aligns with your view and value of the bank relationship. Adjustments may need to be made, but they don't have to be adversarial. It doesn't have to be a win-lose, but it should be well done, balanced, and appropriate across several ways, right? Don't make your bank do a lot of work. Should they respond to a full RFP if you're really looking to reduce prices on a couple areas? So there's a number of factors that go into that. And so when we partner with firms, we work through those items, figure out the approach, execute on that approach, and ensure that the relationship is good. You achieve your objectives of maintaining the relationship, optimizing your pricing. So any additional thoughts, Kristen? Are we good to go?
I think we're good to go.
Excellent. Thank you all for listening, for answering the different poll questions we had. We have just a few more items, and we'll turn it back over to Brian to wrap out and round out our half hour.
Thank you, Craig. Thank you, Kristen. And thank you, everyone, for joining us today. For more information on the guide to bank pricing, including how to order it, be sure to click the link in the chat box, strategictreasurer.com/pricing. Thank you, and we hope you have a good rest of the day.